Hi there, and welcome to Commodities. I'm Lindsay Biscaya. Here's some of the stories we're tracking for you in the BNN Bloomberg newsroom. Cameco reported profit and revenue in its latest quarter that topped expectations. The results were driven by higher uranium prices and solid production. Looking ahead, Cameco says performance across its uranium fuel services and Westinghouse segments remain on track. Ero Copper is one of the best performing stocks on the TSX today. This company posted higher profit and revenue in its latest quarter that topped estimates. Adjusted earnings also surged 98% compared to the same period the year before. Ero is also maintaining its 2026 copper production outlook and is leaving its CapEx forecast unchanged. And shares of Gibson Energy are taking a hit today after it reported adjusted profit for its latest quarter that came in below consensus. Cash flow also fell short, dropping 19% compared to the year before. Gibson says the losses in that quarter were primarily due to underlying assets, restructuring costs, and higher depreciation. Okay, let's take a look now at how some key commodities are trading today. We'll start with energy prices. Oil dropping as a fragile truce holds in the Middle East. You can see oil's down almost 4% at the moment. Gasoline, natural gas also following that trend because of what's happening here in the Middle East. And we're also seeing that elsewhere too. Like when you look at some of the metals and how they're trading today, the price of gold reflecting what we're seeing in the Middle East as well. Obviously, there's that truce that's holding at the moment when it comes to a ceasefire between Iran and the U.S. But we're continuing to watch to see what happens there. But it really is affecting the price of commodities here at home. Gold advancing once again as the U.S. And Iran truce holds for another day. Silver down, though, by 0.1% at the moment. Copper is up by almost 3%. So we'll continue to track that throughout the day. Canada's Competition Bureau filed an application with the Competition Tribunal challenging Keyera's proposed acquisition of Plains All American Pipeline's Canadian natural gas liquids business. So for more on this, Bloomberg's executive editor for Canada, Derek DeCluet, joins us now. Derek, it's great to have you. So tell us, what is the background here? How did we get to this point with Keyera?
Yeah, this goes back almost a year, actually, when Keyera did this deal with Plains, which was about $5 billion Canadian. The idea to make Keyera a much larger company in the midstream energy business. And this included both some U.S. assets of Plains, but also primarily its Canadian ones. Now, this is primarily about the business of natural gas liquids processing. Now, what is that? So natural gas producers produce a variety of things in the course of their operations, and natural gas liquids can be processed into things like propane and butane and useful fuels like that. And it's a very capital intensive business. So there's very few players that are actually in it. And the Bureau's concerns, of course, is that Plains was a competitor of Keyera, and now by combining forces, that they'll be consolidating that part of the industry too much.
There's a bit of a back and forth here, too. Like the Competition Bureau says that this would reduce competition at a crucial natural gas liquids processing hub in Fort Saskatchewan. Keyera says that they disagree with that. So tell us more about the back and forth here and whether this deal could actually close anyways.
Yeah, I mean, it's consolidated, as you say, in Fort Saskatchewan. It's in the Edmonton region. And if you kind of look at a map of the thing, natural gas pipelines that require this sort of processing activity in Western Canada, they tend to lead to this one spot where there are a number of competitors. Now, it's the Bureau's contention that allowing this deal would essentially take the number of large integrated competitors in natural gas liquids processing from 3 to 2, and therefore, the combined entity would have just too much pricing power, too much ability to dictate terms of the contracts, and so on. And that's why they're standing in the way. Keyera's response was interesting because they said the deal could close, which presumably their lawyers know, and that may imply that what they have is a mostly intact deal where they have to divest some assets in the Fort Saskatchewan region, find a buyer for some of these things, while keeping most of that $5 billion package that they bought last year in one place, and being able to assume most of those assets. So that's where things stand. Keyera hasn't given us a whole lot of detail on why they think the Bureau is offside and why they think the competition issues are fine. But we expect to find out more in the days ahead.
I'm sure we will. Okay, we'll leave it at that. That's Bloomberg's executive editor for Canada, Derek Tecluit, joining us live. Derek, thanks for that. Ottawa is spending money with help on the way for steel and aluminum producers, a $1 billion loan program for businesses that are hurt by Donald Trump's tariffs. The U.S. president last week also extended the tax to more products. CTV's senior political correspondent Mike LeCouture has more on how the loan will work and who will benefit.
U.S. tariffs of 50% on Canadian steel, aluminum, and copper has made it difficult for companies to not fold under the pressure, especially when you consider how reliant some are on the American market.
90% of what we manufacture crosses the border. So for us, what's happening is really critical to our business.
Many are hoping for an end to the trade war, but even senior cabinet ministers can't say if or when that will be.
You don't know, I don't know.
It's why the federal government is announcing a new $1 billion loan program for companies affected by the tariffs. The 3-year loans will be worth between $2 and $50 million, with the first year being interest-free.
Short term, our goal is to provide liquidities to companies in order for them to keep their workers.
Conservatives say loans aren't the answer.
We were reading this announcement today very concerned that there is no deal coming at all, and the Liberals have said nothing to the contrary.
There's also a sense that forestry and softwood lumber are being left out.
The industry needs as much support as industries that are located closer to Ottawa.
A 2024 report from the Auditor General criticized pandemic-era business loans for a lack of oversight, saying there was a lack of value for money. While Karen Hogan hasn't seen the details of this latest program, she did have this advice.
I would like to see that there is a way to measure that the intended outcomes are happening.
The government says there will be a process and scope for approving the loans with additional follow-up. Minister Joly added the government is working on similar relief for the forestry and softwood lumber sectors.
That was CTV's Mike LeCouture. Coming up next, it's been a year since China responded to U.S. tariff threats by imposing export restrictions on heavy rare earths and permanent magnets. Learn how effective the U.S. response has been and what may happen next after this. Stay with us. When China restricted exports of heavy rare earths and permanent magnets last year during the height of its trade dispute with the U.S., Western allies responded by quickly implementing domestic industrial policies and partnerships to reduce reliance on Beijing. To assess this global response and the main challenges that lie ahead, we're joined now by Gracelyn Baskervin, Director of the Critical Minerals Security Program at the Center for Strategic and International Studies. And it's great to have you join us. Thanks so much.
Thanks so much for having me.
So looking back on the last 12 months, how would you assess the West's policy in response to that export ban from China? Do you think that was a good idea?
Last year actually mobilized an unprecedented amount of cooperation around rare earths. What we saw in the aftermath of the restrictions was the most coordinated global response. Because those rare earth restrictions were not just targeted at the United States, but the entirety of the world, we saw unprecedented financing partnerships go out with Japan, Australia, Saudi Arabia, African countries, South America, all focused on this. And really what this showed is, given where the resources are, the investments in research and development, innovation, processing, and magnet manufacturing, that it became the driving force of 2025.
Interesting. So I guess before we go further, can you give a brief summary of the heavy rare earths and magnets that are being constrained by China and what they're used for?
So China really targeted these heavy rare earths. So there's two types of rare earths. There's light rare earths and heavy rare earths. And China targeted the heavy rare earths because they processed 99.5% of the world's heavy rare earths, which meant that no matter where they were mined, they had to go back to China for processing. Why this is really consequential is, to your point, is what are they used in? These heavy rare earths, particularly dysprosium and terbium, are used virtually in every form of defense technology, from fighter jets, warships, missiles, tanks, lasers. They're used in automotives, from stereos to steering wheels. They're used in cancer treatment. And so what it really meant is that the restriction of these heavy rares had a consequence on every part of our national economic and energy security.
What about the magnet side of things? Can you explain that side?
So where the rare earths were coming from being processed in China, they were then turned into permanent magnets. And 93% of permanent magnets are manufactured in China. So what that meant is regardless of where the materials were coming from, again, China had a chokehold on those magnets. So not only did we see the restrictions in April last year, in October, China doubled down and they implemented something called a foreign direct product rule, which meant that any magnet that consumed 0.01% of Chinese rare earths were subject to those restrictions. And that's when the U.S. realized we weren't just vulnerable for the materials, but also those magnets.
Okay, interesting. So you're saying that ever since these export restrictions went into place, it's really caused other countries to kind of work together and form new partnerships. So which countries are emerging as credible participants in a rare earth supply chain outside of China?
So Australia and Japan stand out as the front of the way. And part of that was because Japan was hit by these restrictions first. In 2010, China restricted rare earth exports to Japan over a fishing trawler dispute. And they've spent the better part of 16 years developing rare earth capabilities. Australia, significant deposits as well as processing facilities. We've seen each country commit to $1 billion of financing within the first 6 months of the agreement signed. Then you have your middle tier countries that are emerging. Saudi Arabia stands out as a big one. The Department of Defense actually became 49% owner of a new rare earths refinery developed in partnership with Ma'aden. We've seen the U.S. through the Export-Import Bank commit financing to countries like Angola for rare earths. So you have the advanced players, Japan, Australia, and you have your emerging players, Saudi Arabia, and certain African and South American countries.
Interesting. Okay, so a lot of spending happening. Now you say the central challenge is execution, right? That comes down to sustained output, diversified supply, and the ability to attract private investment. Are you confident that can happen at a fast enough pace to avoid like a spin out of a global supply chain?
No, we're not sure. It's a very precarious relationship. The reality is that mining is not an industry that we turn on and off very quickly. On average, globally, it takes 18 years to develop a mine from the time we identify a deposit to the time that it is a producing asset. So the reality is we have put out the capital, we are investing in innovation, but we remain highly reliant on China and will for some years to come. However, every year will be better than the one before that.
Okay, Trump and Xi Jinping, they did reach an agreement to suspend China's export restrictions for 1 year back in October. We know that Donald Trump is going to China in a couple of weeks from now. Where do you think that will bring things when the two sides discuss things further in a few weeks?
Rare earths and critical minerals at large have become a core part of the economic statecraft toolkit between the two countries. Right up there with what we've seen chips. We saw that the U.S. opened up chip exports to China last year, along with tariffs. A lot of these restrictions came on the back of the U.S. increasing tariffs to China. So if you were to look at the top issues and kind of the current economic relationship that'll be under discussion, tariffs, chips, and critical minerals will be right at the top.
Before we let you go, the last time you were on, you discussed how important Greenland is to Western national security. We're in May now. The topic of Greenland hasn't really been at the front and center of things, but have you seen any developments on just how quickly the U.S. is moving to tap into resources in that area?
You know what's really interesting about President Trump's speech at Davos, actually, was a very clear acknowledgement right at the top of the speech that Greenland had a really binding constraint to developing those rare earths. While they have phenomenal deposits, they're about a mile under ice. And he pointed out that that makes it a really big challenge. And one of the reasons that the United States ambitions in Greenland are not necessarily about rare earths first, but primarily around national security. So what you see is that while Greenland, is an interesting long-term partner, it's not going to be a source of immediate rare earths, and that has been clearly acknowledged by the Trump administration.
So you don't see the U.S. moving in anytime soon for that reason?
It doesn't seem that critical minerals will be the driver of that. One thing about this administration that I think is worth noting, they're quite clear with what their motivations are in countries. When you look at countries like Ukraine, DRC, Saudi Arabia, minerals have remained a consistent part of that dialogue. Now with Greenland, what we have seen is that minerals are part of the package, but maybe not the front driver.
Got it. Okay, we will leave it there. Gracelyn Bascarin, Director of the Critical Minerals Security Program at the Center for Strategic and International Studies. So great to have you. Thanks so much for joining us.
Thanks for having me.
Up next, oil prices are dropping today, even as tensions continue to escalate in and around the Strait of Hormuz. We've got more on that in a moment. Stay with us. Oil prices are declining today after the U.S. confirmed its ceasefire with Iran remains in effect despite recent attacks on the UAE and ongoing disputes over shipping in the Strait of Hormuz. And while the U.S. expects Iran's oil industry to yield under the naval blockade, our next guest suggests that Iran may have the financial bandwidth to withstand American economic pressure for months. We want to welcome in now Halima Croft, Global Head of Commodities Strategy at RBC Capital Markets. Thanks so much for joining us.
Thank you for having me.
So as I mentioned off the top there, Iran launching some new attacks on the UAE. It's also disrupting shipping in the Strait of Hormuz. But the Pentagon still says this falls below the threshold of restarting the war. Do you think the U.S. is showing reluctance to kind of resume attacks on Iran at this point?
I mean, the United States does not seem to want to get back into a hot war with Iran, and it's trying to sort of manage the market by essentially saying the ceasefire is holding, oil prices should come down. But the reality is we're going to meet the 1 month, ceasefire anniversary at the end of this week. And we've had no material increase in exports through the Strait of Hormuz. And I think that's a really important story for the market. Many market participants continue to trade on these headlines. What they should be watching is the reality of molecules moving through the strait. And we are far from what we saw pre-war. I mean, Secretary Hegseth might talk about one ship and talk about that as an important data point. We would have 90 to 100 ships moving through the strait pre-war. So we still are effectively losing 12.5 to 13 million barrels of crude exports every single day, despite this ceasefire.
You mentioned that ceasefire anniversary coming up. We've seen Iran kind of sending mixed signals, right? They appear to be testing the truce with the U.S. while also offering diplomatic off-ramps through Pakistan. To what extent do internal divisions within Iran's regime make it harder for the U.S. and Iran to actually reach some kind of lasting deal, do you think?
I mean, there's certainly a question about who has ultimate sign-off authority within the Revolutionary Guards. How much leeway do the sort of civilians have to craft a deal with Washington? But what I think is really important is all these headlines about, the Iranians are showing a willingness to make concessions. It's always a question of where is the origin of those stories coming from, and have the Iranians actually moved off their position that they have a fundamental right to enrich uranium, that they are not shipping out their stockpile of enriched material? Have they really made any significant concessions off of their initial bargaining position? And has Washington changed its bargaining position when it comes to these critical issues around enrichment and who actually controls the Strait of Hormuz when this war ends? So there are always these inter-day headlines that seem to suggest progress, and yet we continue every single day to have 12 to 13 million barrels off this market.
And it's interesting, too, because we're seeing the U.S. trying to, or Donald Trump at least, with Project Freedom, trying to guide ships through the Strait of Hormuz. At the same time, a lot of vessels are being targeted by Iran. So if you're a commercial ship operator or insurer, what would give you the confidence to actually go and transit through the Strait of Hormuz at this point?
I mean, extreme reluctance to transit through the Strait of Hormuz, especially after what has happened with the resumption of some Iranian attacks on Emirati ships and infrastructure like the all-important Fujairah port and storage facility, which sits outside the Strait of Hormuz. What would give them confidence, I think, would be some type of clear resolution to the conflict. And again, a ceasefire does not mean straight reopen. And we seem to be still far and away from a lasting deal to reopen the straits, despite the almost daily inter-market day headlines signaling progress. But again, every day we wake up and ships are not moving.
So you say, obviously, that's what tankers would need, is more confidence that they can get through safely. A ceasefire is not going to cut it. What wording would need to be said
Well, the reality is, like, you can say we have a ceasefire, but as long as the Iranians show willingness to fire on ships, as long as they say you have to use their toll booth, like, think if you're a European shipper, the Revolutionary Guard is actually a sanctioned entity. Can you legally afford to pay the Revolutionary Guard a toll to move through the Iranian channel? What is the risk of mines if you go through the Omani channel? The Iranians can still reach you if you go through the Omani channel. So again, the question is, what is your confidence that that passage is going to be secure? And I think it'll be a varying risk profile depending on which shipping company. But the vast majority, I think, of Western shipping companies are going to stay out for the foreseeable future. They absolutely need to see some type of like lasting agreement and confidence that the Iranians are going to stand down with drone and missile attacks on tankers.
The Trump administration is still arguing that its naval blockade will eventually cripple Iran's oil sector by forcing it into, quote, tank top conditions. How close is Iran to reaching that point?
I love that question because it presumes that the Iranians can be quickly broken, that there's some silver bullet. And the reality is that Iran has withstood, severe economic pressure before, and they did not immediately yield. So I think this 13-day tank top deadline is not going to be what ultimately changes the Iranian calculus. And they have means by which they can selectively start pulling back in terms of production to preserve storage levels. Again, they've had to deal with severe sanctions before, which impeded their ability to sell oil. They've dealt with severe economic hardship before. There's not an indication yet that that's going to be the sort of silver bullet that forces them to change course on their bargaining position around the nuclear program.
Interesting. And I also want to get your opinion on the UAE leaving OPEC. Do you think that was more because of oil prices right now, or where do you think that reason actually is for them leaving?
I think it's really, primarily driven by investment. The UAE has invested around $150 billion in expanding capacity. Since they made those investments and have launched this new benchmark, the Burma benchmark, there had been a sense that the UAE would look to monetize that investment. So this has been something we've been discussing for years. It flared up at a July 2021 OPEC meeting when they were debating benchmarks. And that was the first time this issue really became contentious in OPEC, with the UAE saying, like, we need a higher production target because we've made this investment. But certainly I think now with the war, you have countries like the UAE taking a really strong position that the United States needs to finish the job. 60% of the attacks that have taken place on infrastructure have happened in the UAE. They do not want Iran left in charge of the Strait of Hormuz. And so I think that they kind of have a new security doctrine going forward, and they want a very robust response to the Iranian threat, whereas some of the other countries, I think, are more willing to have a diplomatic endgame.
Okay, we'll have to leave it there. We're out of time. Halima Croft, Global Head of Commodity Strategy at RBC Capital Markets. Appreciate your time. Thank you.
Thank you.
And thank you for watching Commodities. You can email your story ideas to commodities@bnnbloomberg.ca. Stay with us. The Close with Marella Fernandez is next.